What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking after for the future. I'm also going to break down what's actually going on with today because we actually had some crazy data that just came out. The PCE report came out and it was not good by any measure. And before I break anything down about it, before I get into any more details about how this all could affect NIO and why NIO will likely get a bit of a bounce very soon, maybe a small one, I do have to mention a couple of things though before saying anything, and that is firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100 is up to you. You're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is any could be a free NIO share. The offer ends in just 4 days. Check it out before they run out. With that out of the way, let's get on with the video. And the reason I didn't display that is because I do have some Wi-Fi problems right now. There is a storm where I'm at, and right now things are not that great, but it's actually not too serious at the same time. Things are going to be fine. Once again, I just have some Wi-Fi issues, but it's completely fine. I still want to talk about NIO, what's happening right now. NIO is actually down about 5% for the day. Seeing the way that NIO dropped, it's not the end of the world because I do think NIO could try to get a bounce here. I also really like these values on NIO, but there is likely going to be more downside later on. Once again, completely fine because that's a very, very good place to be buying. But I want to break down what happened today. Why did the market react so negatively? First off, when it comes to NIO, the Audi EV naming lawsuit against NIO did get shut down. We saw other things going on as well. We also saw new plans about the next battery plant in China. Once again, I did go over all of these pieces of news in my last videos. We do have earnings also coming out for NIO very soon, so I do expect NIO to maybe try to bounce or try to push up just a little bit very soon. But I also want to break down what happened today. Right now, we saw the market take a bit of a hit after we got a very hot inflation report again. Once again, not what the market wants to see. Right here, we could see that the key inflation by the Fed, their favorite inflationary measure, the PCE, it rose 0.6% in January, more than expected. Once again, way too hot, not good for everyday Americans. The core personal consumption expenditure price index increased by 0.6% and was up 4.7% from a year ago. Headline inflation up 0.6% and 5.4% respectively. That's insane. That is very, very insane. And on top of that, you could see the numbers are likely going to accelerate, and they've already accelerated. They're already likely going to continue to do this. The Fed has a lot of work to be done. Looking at the core, you could see that the forecast was 4.3%. We got 4.7%. That is crazy, crazy high. That is way too high. That's like 10% higher than what we wanted it to be. Inflation is hot. And not just that, I did mention this yesterday that we did have a bit of a downtrend right here. I'm going to move my cursor, but look at how from right here to right here where we are currently, there was a downtrend in the chart, and then all of a sudden we got this one increase. Well, the reason for that is because inflation does not tend to just collapse immediately. It has a tendency of actually getting a push up, or at least respecting cycles, right? So now that we've actually come down the way we have, seeing inflation tick up a bit is completely natural. And on top of that, it really tells us the Fed has a lot more work to be done. Looking back, PCE right here is now causing the yields to price in a more and more and more hawkish Fed, a Fed that's going to continue to tighten, and they are basically suggesting, right, that we're getting very close to those levels from 2007, before the great financial crisis. This is telling me, once again, there's so many red flags pointing towards a recession. It's not just the yields, it's not just the bonds, it's also what we saw in the stock market. It's also because of projections. There's so many things out there, and we're likely going to get some pain in the credit markets very soon. On top of that, we can see right here, the economy is very overheated, according to Jason Furman. We have made little, if any, progress on inflation. There is little, if any, reason to expect a large slowdown going forward. Core PCE at an annual rate, 1 month, it's up 7.1%. 3 months, 4.7%. 6 months 5.1%, and the 12 months it's up 4.7%. So we got a big 1 month change compared to the previous month. That's insane. So month over month we got quite a bit of an increase. We got a pretty big increase as well looking at the different months. It is still too hot. There's work that needs to be done. JP Morgan's Dimon is saying that interest rates could reach 6%, and he has a lot of credibility. He could be right about that. He really could. If inflation is continuing to get hotter again and again, the Fed is going to have to be even more hawkish. They have to do a much better job. On top of all of this, I just want to mention something. Brisk spending growth and faster price increases for both core goods and super core services spell bad news for inflation. What is this telling me? Here's my question to you. Should we trust Jerome Powell? And my honest answer is no. Flat out no. Okay? I say this because he's the guy that told us inflation would be transitory. Inflation is not transitory. High inflation is not transitory. This is going to be a while lasting event, and it tends to be very sticky. Secondly, he ended up telling us very recently that, oh, don't worry, guys, we're seeing disinflation. Where's the disinflation? Yes, it was slowing down for quite a while, but we have these cycles and now it's starting to heat up again. Now what? Where's the disinflation? He did not tell the truth about that, right? It's not aligning with what he said. And now we're actually seeing the fact that disinflation was what was transitory, and now we're coming back into higher levels of inflation. And then Jerome Powell told us, all right, let's take a few steps back, that a soft landing is very possible. We could get a soft landing. The market started to rally off of that. Do you believe him? I personally don't believe him. I think the landing is going to be a lot harder than what the Fed was expecting. I think fighting inflation was a lot more difficult than what the Fed was expecting too. And with the Fed being wrong, this is starting to resemble things that happened in the 1970s, where the Fed was getting the numbers wrong. They started to, slow down a little bit too soon. Then they reached a point where they had to start tightening even more, and it led to an economic catastrophe, right? We saw crazy high levels of inflation. There was so much pain for people. The credit markets were just taking hits. It was just insane stuff. And now the real question is, what's going to happen to the stock market? Well, I think the market's going to try to get a bounce. I don't want to switch on to my SPY chart because I know my Wi-Fi is very slow. It might just lag completely, and I do apologize for that. But as I mentioned yesterday, we did have a bullish divergence developing on SPY and NASDAQ. I'm still seeing it as the market did bounce. At least to some degree, we got a small bounce today. And I believe we're going to try to see a continuation to the upside. I think we're going to end up filling this gap right here on NIO. And I think the market's at least going to try to get a slight push up. And as that happens, all right, I don't think this is going to last forever. I do think NIO is going to try to fill some of these gaps for the short term, but then it's going to depend on earnings. What does NIO say for earnings? If guidance is really good, there's a chance we could see an improvement. But other than that, I have to be honest with everyone, all right? For the short term, maybe NIO and the markets try to push up a bit. For the medium to longer term, all right? For the longer term, we have some bearish catalysts. Inflation is hot. The Fed's going to continue to tighten. There's going to be pain in the credit markets. The treasuries are not necessarily supporting the rally that the market was seeing, nor was smart money and institutions. They were selling at the top, not buying. They were selling. They did not trust the rally. And now the market's slowing down, which tells me the market has more downside. Okay, for the short term, yes, the market could bounce a bit. Yes, we might see a bounce. We're very close to levels where we should bounce. Yes, but for the medium to longer term, I'm seeing way more downside. I really believe it. I think NIO, unfortunately, although she might try to push up to fill this gap soon, unfortunately, when you zoom out of the chart, all right, don't forget this like head and shoulders like formation I told you guys about. It looks to me like NIO is going to continue to break these levels. You could see NIO was holding 9.5 in the past, bounced off that to get to the 13s. It's been declining since. And as you could see, it's now making these new lows, actually at 9.13 today. 9.13 to 9 is where we have this demand zone. We're going to see some buyers try to step in to defend this area. We could even bounce to get up here. But we do have major resistance around 10. 9.9 to about 10, that zone right there. And then we could try to climb a little higher for the shorter term. It is possible, but going into the longer term, going into the medium term, as the market does see more and more downside, I believe this will ultimately drag NIO down back to the 8s in the future. Okay, be prepared for that. Make sure you watch 8.7, 8.3, and 8 flat. These are very important levels. I know nobody wants to hear this, but it's the truth. But I don't see this as a bad thing. Once again, this is a big opportunity for people to actually start loading the boat on these shares at these very cheap levels. Because eventually, the market will rally like how it did in 2020 and 2021. It will return. The bull market will return eventually. So we just have to be patient, and we have to do what's best for our own selves. Nothing I said is financial advice. I just want to thank each and every one of you for listening. Have a great rest of the day. Remain calm, cool, and collected. And I'll see you guys in the next one. NIO to the moon, because the long-term future is still incredibly bright. And peace out.